they're bolting it on. And that's not to deny the fact
No.
that AI will, of course, revolutionize. It's going to revolutionize every business, but to make a thing of it, to say we are differentiated because we're going to bring in AI is such a, it's boring. Sorry, that's just the way the world is moving. It's inevitable. If you're not, you're left behind. Every week, I'm delighted to see more people join Stock Club, especially because we've set a goal to double our podcast audience by the end of 2025. If you like our show and you want to support what we do, the best way is to click the subscribe button below. In exchange, I promise we'll keep bringing you researched market insights, detailed stock pitches, chats, laughs, and lengthy descriptions of graphs, which everybody loves. Thank you. Let's get on with the show. Mike, did you have a good Paddy's Day?
Well, I had a nice weekend, but I didn't do much for actual Paddy's Day. I actually worked. I worked Paddy's Day and I'll take the Friday off.
I think you hit an age where St. Patrick's Day is up there with New Year's Eve. You realize it's a social construct designed for people younger than you.
That's true. And I also think like Paddy's Eve, the 16th, is usually kind of the night out.
It is.
Anyways,
yeah.
I'd much prefer to have the big night out than I don't drink all day and then come over on a Tuesday to start your week off. Like,
I had reason to drive into town on the day of St. Patrick's Day. And for our American listeners, we call the middle of Dublin City town. It's even though it's a city, when you're driving into town, you're driving into the middle of Dublin. And I was actually dreading it. I really don't want to do this drive. The streets are going to be jammed. There's going to be people falling out of pubs, traditional style. But no, it was actually quite quiet, which really surprised me. So there was something different. You're right. I think it must have been Paddy's Eve. 16th of March is the new 17th of March.
Do you know what came up on my social media there recently was, do you remember Arthur's Day?
Yeah.
Now, if you're talking about like
wow,
absolute mess, Arthur's Day was like Paddy's Day times 3. It was, oh my God. Good crack.
Well, it was great crack. And for our listeners, crack, by the way, I'm sorry about all these explainers. Crack is a totally Irish word that means fun and does not mean what it means in America. But it was invented by Diageo. Like they decided we're going to make this national holiday where we all drink Guinness for Arthur Conan Doyle.
And it's funny because it's funny how it's played out since, but I think it was a way of getting younger people to drink Guinness.
Yeah.
Which is now 10, 12 years later, or whatever it was, it has come to fruition. I don't think Arthur's Day was the catalyst. I think Arthur's Day was just an excuse to get pissed.
Just needed to exist.
But yeah, it really, because the whole thing was you had to have a Guinness at 17:59 minute to 6. Which was the year. So you had to get the pubs full before that. It was basically carnage. Anyways.
Oh, I mean, everyone was cynical, but went with it because we're Irish. But anyway, this Arthur's Day is a joke, right? Come on, let's go to the pub. Speaking of Paddy's Day, so we to our loyal listeners, we had a Paddy's Day sale in MyWallSt where everything was, I think it was half price. Is that right, Mike?
Yeah, 50% off for everything.
Yeah. And we've decided to extend it for a few more days, or maybe hours. So if you're listening to this podcast and there's a product that we have, or you fancy and you've always wanted to buy but never wanted to buy it because you didn't like the price point, well, you better get on it pretty soon. And I'll give you a reason to at least be interested in Nexus 2, because Anne-Marie took the lead in researching when we're publishing today, Thursday, and she sent me a tome to pitch it to us both. And she said it is a Peter Lynch boring business kind of vibe, but essentially it's unlikely to be disrupted for the next 2 decades. It has healthy growth, it's profitable, it's family owned, it has almost no debt, and as she said, it's a nice little business, Australian based. And as I read the thesis and the analysis that Anne-Marie constructed and researched, I thought this is quintessentially Anne-Marie. And as our listeners know, Anne-Marie's pitched some great businesses like Brunello Cucinelli, which is rooted in old world commerce, if you like. So she wouldn't be inclined to pitch CRISPR-like businesses. She looks at businesses that have been around a while, will be around for the very foreseeable future. She said to us that the stock has grown at a 38% compounded annual growth over the past 5 years. And it was a stock, frankly, that I would never have found. And I just think it's a beautiful little business. So if you want to jump on our St. Patrick's Day extended sale, Nexus 2 might be of interest to you. But sure, look, do whatever you want. You're going to do it anyway, as an Irish mother would say.
Brilliant. Yeah, I really like that business. It reminds me of some really, really successful businesses we've already seen in the US. It's doing over in Australia. So very exciting one there for Nexus coming out today. Well, yeah, when we publish. Okay, so we're discussing 2 IPOs today. Emmet, you kind of gave us some headings to kind of go back and forth, bit of a tennis match of sorts.
Yeah.
So you are discussing CoreWeave.
Uh-huh.
Very exciting AI business, and I'm discussing Klarna, the buy now, pay later specialist, which is, it hasn't given a date for its IPO, but it's all set to go in the coming weeks. So do you want to kick us off? Give us a bit about CoreWeave, a bit about the IPO and what's happening.
So yeah, in our little pitch tennis where let's both answer the same question as we go through it. And then I think it would be fun for us to finish with answering the following question. Do you think, we both answer this question, do you think the business discussed has the potential to 10x at any point in the future? Now, every business does. They have the world to play for, but just based on what we know. Okay, right. As you said, I'm going to pitch a business that's probably less familiar to our listeners than Klarna, which is B2C ostensibly, whereas CoreWeave is business to business or B2B. And it's a cloud computing company. It's based in New Jersey in America, and it was founded not too long ago, 2017, by 3 lads who initially started the company as a cryptocurrency mining operation under the name of Atlantic Crypto. Now, when the crypto market experienced a downturn, I think it was in around 2019, the founders decided to pivot the business towards providing GPU-based infrastructure for cloud computing. So think of it like as the Airbnb for cloud, for basically AI computing. You can outsource the brain power of the business. So today it specializes, as I said, in GPU-powered cloud services, and it rents out these NVIDIA GPUs to businesses that need to power or train or run AI models, particularly in the field of generative AI. So it's, as I said, it's kind of it's a tried and tested business model with in other industries. And the best I could think of is the Airbnb of NVIDIA chips, but there's probably better analogies out there. Its paperwork for the IPO says that it designs and operates data centers optimized for high performance AI tasks and offers customers the ability to rent GPUs on a flexible pay-per-use basis. It's quite clever, really, because their setup allows, as I said, AI companies and especially tech giants to access cutting edge hardware without having to go into the really, really heavy capital expenditure involved in buying a whole array and cabinet full of NVIDIA chips and installing it in a data farm and building out all the associated stuff like air conditioning and maintenance and upkeep and operations and all that stuff. So it's a turnkey provider of a brain for AI. And in corporate lives, there's always a debate about what activities are core, like core to your existence, and which ones are non-core, which is really a fancy way of just deciding what should be insourced and what should be outsourced. So in no time at all, CoreWeave has grown into a major player in AI infrastructure, and it's working behind the scenes, as I said, to provide this kind of supplemental, or indeed middle of the computing power to hyperscalers such as Microsoft and Meta and even AI startups. And although it operates like a specialized version of AWS, Amazon Web Services, or Google Cloud, it's the fact that it just focuses purely on raw computing power with the most state-of-the-art chips. So that's what it does.
That's interesting, yeah, because before NVIDIA was this AI powerhouse, one of the main uses of its high-end chips was Bitcoin mining. So they were kind of like, oh, well, we have all this infrastructure in place. What can we do with it that isn't Bitcoin mining when Bitcoin was down? So that's interesting.
But the capex, the capital expenditure required to build a proper AI server array is huge. So early stage and startup companies that lack that kind of early stage capital can just go to these guys and buy a rack, as they say, or rent a rack. And that's that. They suddenly have the back room ready. And I think that's a nice proposition for all types of businesses.
Yeah, absolutely.
Okay,
Okay,
Mike, what does
so
Klarna do?
Klarna, as we said kind of in the intro, a lot of people will know Klarna either from using it or at least kind of have heard of it. So it's a leader in buy now, pay later payments operations, I suppose. Um, but if you haven't heard of what it is, or like if you're just acting dumb, I suppose, for the sake of the podcast, it's essentially a payments company that allows shoppers to buy now and pay in installments over the coming months. It essentially gives out no interest loans to online shoppers, and then where it takes in money is from the merchant side of things it works with. Scale is pretty impressive. It's amassed 93 million active customers and has 675,000 merchants as partners. This is across 26 countries. In 2024, it helped facilitate $105 billion of gross merchandise volume over the platform itself. It's originally from Sweden. It's expanded globally, but a lot of focus obviously would be on the US, where it moved its operations to in 2019. And that's what it's essentially turbocharged the business into what it is today, is that US expansion. It's actually very interesting. They released in their prospectus document that the company was profitable up until it moved into the US. So for a startup in Europe to have the kind of different mindset until you get to the US, and then we're like, no, it's expansion at all costs. And so I thought that was kind of an interesting tidbit to come out from the whole thing. We don't have an IPO date yet, but we do know it'll trade under the ticker KLAR, and it's going to go onto the New York Stock Exchange. So yeah, that's Klarna. I think it is the biggest leader in the buy now, pay later space as a pure play anyways. There are a lot of other companies. We're going to get into it. We're going to get into it later in the show. But yeah, I think people will be fairly accustomed to Klarna, or at least buy now, pay later in general.
Yeah, I think so. And I mean, if you're used to reading the business pages of whatever website you go to, I'm sure stories about Klarna have come across your line of sight in the last couple of years. Right, so you've described which IPO. The date isn't clear, and the stock market is, did you say the NASDAQ?
No, New York Stock Exchange.
Oh, New York Stock Exchange. Okay, let me just give you what the deal is with CoreWeave. So they too have filed for an IPO, and it's expected to go across the line and public later this month. So, I mean, considering we're now at the 20th of March, we're talking about in the next week or so. It's going with the NASDAQ, and the ticker symbol it has chosen is CORWV. And the
neither tickers.
Say what?
I don't like either ticker now, to be honest.
No, it doesn't roll. Like, ticker is meant to be something. Well, CoreWeave, CRWV. I guess they're trying to pick something that is memorable, but that one just doesn't work so well. But anyway, they're saying they're going to probably. The rumor mill says they're going to IPO early next week, and it says it's going to raise about $4 billion through the IPO, with a target valuation of around $35 billion.
Okay, so big money.
It's big. Yeah, big check coming in on a big valuation. And I guess we should dig into what's behind, that valuation. What valuation is Klarna going out at?
So Klarna,
reading that?
Yeah, Klarna is looking to raise 1 billion quid at a valuation of about $15 billion. So this is there's two very interesting things about this Klarna IPO that will have a lot of investors taking notice. The first one is the valuation. So essentially in 2009, Klarna was valued at 5.5 billion. This is right around the time it established itself in the US. Considering what was about to happen, the pandemic, everyone switching almost straight away to online buying, pretty good timing. And then we obviously know what happened after the pandemic in terms of valuations across private and public markets. So Klarna had this huge purple patch growing like gangbusters, and then did a re-raise in 2021, valuing the company at $45.6 billion, which is outrageous. The company grew ninefold in the space of 2 years. valuation wise. Just a year later in 2022, which is also kind of a testament to how obviously nuts things were that it had to do another raise a year after it just did this massive raise. But that's probably another podcast around private equity and kind of how crazy that period was in terms of loss making and costs and everything else. But it did another fundraising round expecting a valuation of around 50 billion. It ended up at 6.7 billion, which just shows two things. It shows how elated things were straight after the pandemic, and then how dour things got in 2022. So this 15 billion target is going for an IPO. It's great return from 2022. It's also a third of what it was in 2021. So I just think it's really interesting that Klarna, and we'll get into, because Affirm is one of Klarna's main competitors. It went public around the time Klarna got the private valuation of 45 billion.
And what did you say is who did you say the competitor was? Affirm. Oh, Affirm. Sorry, I don't even know those guys. Affirm. Yeah. Affirm. I probably do.
Yeah. So yeah, there's a lot there. Like, just for a company to so publicly take such a huge valuation cut on the private markets, it's rare. As CEOs and founders really hate to do a down round, but to do a down round this publicly and of that much of a haircut, it's a big statement about the business. And so to rebuild from that and kind of come out the other side of it as it has, it's impressive. And we'll get into the CEO and all the rest.
But on that down round now, if memory serves me, there was a rumor that buy now, pay later was going to be core to Apple and the iPhone, and I can't quite remember the timing of that, but I can imagine that was quite the body blow to Klarna. If you could buy now and pay later with Apple, it was going to be. I remember reading was the death knell of Klarna.
Yeah, absolutely. And then there's other things as well, like as in Klarna was operating in a basically incredibly low to zero interest rate environment for a long time. That's where it did so much of its growth. And then immediately you go from 0% to 5% in the space of a year and a half or whatever it was to a lender. That's going to completely rock the business too. So there was a whole like kind of perfect storm it faced from the highs of 2021 to the lows of 2022 and beyond. And so there's a lot of moving parts to this story. But let's talk revenue first. So I'm interested in CoreWeave. It's going for a $35 billion valuation. What revenue did it bring in?
It is. And when you think about if a management team is charged with what's the most important thing to get right on the run up to an IPO from a self-serving perspective, it's revenue growth. You need to demonstrate ostensibly revenue growth, that the top line has been growing, and give some confidence that it's going to continue to grow with the use of funds that come from your IPO, because the only reason a business IPOs is they want a giant check and see it as the best route to get that check. So I have the S1 form for CoreWeave in front of me. That's the documents that are lodged pre-IPO in America. And it shows the consolidated financial data, which I'm going to read the revenue line year on year for 2022, 2023, and 2024. So in 2022, revenue was 15.8 million. So let's say 16 million in 2022. A year later, it was 229 million. So it grew from 16 million to 229 million. And then the year after, it grew from that in 2024 from 229 million to 1,915 million, or 1.9 billion. So revenue absolutely went straight up, a vertical line almost, on from 15 million to nearly 2 billion in the space of 2 years.
More.
Exactly.
12,
that is
15.
Such a rare occurrence. Yeah. So 15 million to, I mean, what is it? Is it 1, 2? It's at 100 and maybe 120 fold growth in 2 years.
No, I was saying 1,200 fold growth. No. No, I'm wrong.
Yeah, moved the
124
decimal
growth.
point
Yeah.
2 places, so it's 100
Yeah.
plus some, so about 100. So yeah, but either way, like 120 fold, 1,000, like that type of revenue growth is
Yeah.
extraordinarily rare. I just, and obviously they're trying to make a big deal of it. So when you look through the consolidated statement of operational data, a lot of other lines are important, but the one that jumps out is that revenue growth, and they're going to try and make a big deal of that to maximize investor interest on IPO day.
Well, absolutely, and I think it's fair enough. There are
Oh
very few
yeah,
companies coming to market putting that kind of growth numbers up. This is a rare occurrence to see
yeah.
that velocity. And I was kind of waiting to make fun a bit because I was expecting a ridiculous valuation of 40 times something with a new hot AI IPO. And look, it is obviously crazy overvalued in the sense of, it's bringing in under 2 billion a year, and it's looking to get a valuation of 35 billion. But
yeah,
in the wider context of things, I'm not
yeah.
trying to justify, 17, 18 times sales as a valuation that makes sense, but it tracks with everything else.
Yeah, yeah.
Yeah.
Imagine being the CFO of a business where revenue is growing that fast. I mean, you'd buy your team new calculators. Right, lads, hand up your old calculator. We got you new ones. It has a space for extra 3 zeros. And they're like, oh, thank you so much. All this maths was, but it's honestly like a fire hose. It's gone from a garden hose of revenue to Niagara Falls of revenue. It's absolutely unreal what's going on.
The
So
big
what's
thing
going
would
on
be
over there in Sweden?
Sweden. Well, not as dramatic as that in terms of revenue, a bit more boring. So I said it's going at a valuation of 15 billion, which again, decent return from one perspective, very poor from another. But in 2024, it grew revenue at 21% year over year to 2.8 billion. But most importantly, it just turned a profit as well. So net income came in at 21 million compared to a loss of 244 million in 2023.
They turned a profit again.
It turned a profit again. Sorry.
Yeah. They're back. We're back, folks. And we're going to
returned to profit. And this is a big deal, which we'll get into in our next question because of the way it's returned to profit and the way the CEO is going through its operations, because it's a very unique approach. So I think we get into it now. So
go for it. So tell us about the outlook, or what's the storyboard?
The outlook, and I'm focusing the outlook on one particular aspect of this business because it's the most interesting thing about this business, and it's going to make the most headlines. We've probably already seen headlines from Klarna, and it's all to do with AI. And this is going to be the big bull case for a lot of investors around Klarna. It's that it's embracing AI 110%. So the CEO, I apologize, I'm going to just call him Sebastian for the rest of this episode, but I have to attempt his second name at least once. So Sebastian Siemiatkowski.
Wow, well done. I decided not to even try and pronounce the founders of CoreWeave. So I was like, 3 lads, like not saying that.
So he became absolutely enamored with ChatGPT when it came out in 2022. And he pretty much immediately cozied up to Sam Altman. He actually said to Altman that he wanted Klarna to be OpenAI's favorite guinea pig, which is a little bit creepy considering a lot of things about Sam Altman and the tech industry in general, but whatever, we'll get past that. So he's probably been one of the most vocal CEOs when it comes to what AI is doing, and most pertinently, the jobs it's replacing within the business. So there's an awful lot of people that are shying away from saying, yes, AI is going to cut out jobs. He is 100% saying with his chest, like, this is the future for this business. He's quoted as saying, I am of the opinion that AI can already do all of the jobs that we as humans do. And in fairness to him, he's putting his money where his mouth is as well. He's estimated that AI has cut 10 million quid from its marketing costs alone. Its lawyers are using AI tools now to generate contracts in 10 minutes. It used to take them an hour, according to him, obviously. And then the big headline, which you've probably seen, is that the company's chatbot does the work of 700 customer service agents, and that the bot resolves cases an average of 9 times faster than humans. So that's kind of the big story around this IPO. First of all, the down round, the severity of the down round. And second of all, how bullish our man Sebastian is around AI and its use, and the implication of what Klarna will be going forward.
Yeah.
So obviously this got loads of people interested because it seems to be a thought leader, I suppose, in the application of AI. And we talked about this for a while in terms of the build out and the AI infrastructure and architecture. And down the line, what are the people, the companies that are going to be applying it the best will be the winners eventually. Do you know what I mean? And we haven't really seen them come to the fore hugely yet. Like there are obviously companies out there that are doing this. CrowdStrike's a very obvious one, and it has been for a while. But Klarna, in terms of how would I say this? It's not a very immediate like jump from okay, it's buy now, pay later payments company to be such a leader in AI in this very specific way, in this use of AI. So people are really excited about the kind of potential of this wide scale automation because it's something we haven't really seen yet. You know what I mean? And Klarna,
no, we haven't. It becomes real when you see it.
Yeah. So it seems to be the largest company embracing this strategy, trying to, I suppose, attain the full potential of AI. I suppose that's a good way of saying it. That's what it's looking to do. So he's saying that it has allowed the company to stop hiring entirely. He says, now if you go on job boards, apparently there are open job positions
for robots.
But
humans need not apply. Keep walking. If you're an AI robot, we want you.
And he's been called out on this saying, I thought you were quitting hiring. And he's like, well, that's replacing, key positions. It's not like hiring a new sales team or like, doing the graduate kind of cycle and stuff like that. So that was in September 2023, where there was kind of the blanket, we're not hiring anymore. So it's taken the headcount from 5,000 to 4,000. And he expects that workforce to eventually fall to about 2,000 as a result of the AI adoption, which is pretty unreal when you think about it. For a number of reasons. First of all, like for him to be so openly saying, like, because he's not doing job cuts, it's kind of, he's saying the natural attrition of people leaving the company will eventually, and we're not.
It's a more polite way of doing it, in fairness,
Yeah,
like it's way nice. Like Keyword Studios is a Irish-based company up the road from here, and it was they do basically stuff for computer games, physics engines and graphics design and all the stuff that makes a computer game look good. And it's a big employer. And as you know, Mike, it was bought out recently. It was a Charging and Fearless pitch about 2 years ago, and it was bought out recently by a big player in America. And on Sunday announced, we are completely zapping this place. It's a huge big cull on headcount because we're going to replace those bots with AI. But I admire at one level that Klarna have said, right, if you're in, you're in, when you leave, you're gone, and we're not replacing you. I think as I say, it is a more polite way of downsizing. But you have to imagine that guy, the founder of Klarna with the fancy name, has also figured that it is better for the business to do it that way. It can't just be, we're nice guys.
Yeah, absolutely. But there is now a twist to this tale. This is a big, huge Wall Street Journal piece on this whole thing. And it's interesting because they got both sides of the story, and there's a few, and a lot of these other sides of the story come from jilted ex-employees, which is a pinch of salt to this whole thing. But it paints a different picture to what Sebastian is painting himself. And that is, yes, Klarna is using AI, but Seb, he's using a lot of it as a PR exercise. And some of the commentary from insiders is that he's using it as a talking point to keep Klarna relevant in the lead to the IPO. As well as that, it explains that the company is not shrinking, but strategically reducing staff because of AI. And so some ex-employees have portrayed them as a bit of a mouthpiece more so than a true kind of thought leader in this space. And obviously there's going to be two sides to every story. So it's how you make it. Like, as in, are you taking up by what he's saying, or are you cynical enough to be like, well, yeah, it is being talked about a lot, this IPO, because of this, and people are very bullish in Klarna because of this. So yeah, I'm kind of undecided. Like I always like seeing the kind of how would you call it, the emperor with no clothes element to certain things, and this could be that. I don't actually know yet. Yeah.
You know, I kind of categorize businesses into one of three when it comes to AI. There's businesses that, despite what Sebastian said, will never be disrupted by AI. Never, never, never. AI will never walk my dog. You know, it just won't. Although, as I say that, I'm thinking of the Tesla robot.
I was about to say those creepy humanoids.
Okay. Barber shops. Well, not in the immediate future. Okay, look, a day at the spa. You know, something I don't do, and I can nearly have never done. But you're not gonna get a neck and shoulder massage from a robot. I just don't think that's.
I don't know.
I'd prefer it. Actually, anyway, I'm not gonna yuck. Hate all that stuff. But anyway, there are definitely jobs that are human centric. You know, then there's businesses that are. I wouldn't say job, but businesses that are human centric. Then there's businesses that were born AI thoroughbreds. Before AI was fashionable, Upstart, Lemonade spring to mind, and two stocks I totally believe in. And I believe within that category, there are going to be dominant giants within industry whose name today are just small or minor players because they started with a clean sheet of paper and said AI only. And then, and by the way, I'm going to pitch an AI thoroughbred this month on Horizon. You forgot the name of the service I'm running despite living it. So I'm going to pitch a stock with Horizon this month that is AI thoroughbred. It's been at it for years and years and years, and is, I believe, going to completely dominate an industry, and its day in the sun is about to arrive. And then there's the third category, which is they're bolting it on. And I think that's where Klarna exists. And that's not to deny the fact that AI will, of course, revolutionize. It's going to revolutionize every business, but to make a thing of it, to say we are differentiated because we're going to bring in AI is such it's boring. Sorry, that's just the way the world is moving. It's inevitable. If you're not, you're left behind.
I agree with you on that point. And like the famous Sherwin-Williams example, the paint company talking about AI. Yes, but I think, and I'm going to defend Klarna in the sense of, even if they are overestimating its application now, the direction it's going means that they will be at the forefront when it comes to fruition, if that makes sense. You know what I mean? Like, as in, if their objective now is to be like, we are AI first, we are embracing the technology to its fullest extent. Okay, maybe they're overestimating how much it's doing now. Maybe the 700 chat agents, you know, was like stretching the truth slightly. But it eventually will turn out that, okay, with advancements in AI, we're kind of first in line. As he said to Sam Altman, like, you know, he's the favorite guinea pig. He wants to be this kind of this I suppose throughput of, okay, if any company can get the most out of it, we're going to be that company.
I don't want to put you on the spot here, but how small a thing can you buy with Klarna? I'm trying to think, how big is this brand going to get? Like, can you buy a pizza with Klarna?
I think you can. I think I've seen buy now pay later on food apps.
I don't like that now.
I'm gonna get into that. In our final section of the actual, I suppose, the industry as a whole. But
right.
But we've been talking about, and it's interesting, and it's funny because we've been talking about it potentially being a talking point, and we spent 10 minutes talking about AI and Klarna, and you're talking about one of the most exciting AI infrastructure companies out there, and we're talking about payments company that's using the AI. So let's discuss CoreWeave before we spend 2 hours talking about this podcast.
Well, look, on the outlook. So we're here now to talk about the outlook of the business, and clearly revenue growth is off the hook in CoreWeave, and I think most listeners would agree that its offering is very future relevant, and it's quite clever too. It makes sense. It's not hyper clever, but when it's pitched, you go, yeah, that makes sense. And I never would have thought of that. That's the kind of reaction I had. But in preparation for this podcast, I read an article by a guy called Ed Zitron, who I've probably referenced in a previous podcast, and he's a blogger on all things to do with the stock market, and he's quite insightful and can be occasionally quite cynical, but either way, he wrote a piece called CoreWeave is a Time Bomb. He opened the article as follows. Now, we got to remember, it's an analysis that comes from the non-optimistic side, which is always worth considering when you're deciding to invest in a business. So he opens his article by saying, in my years writing this newsletter, I've come across few companies as rotten as CoreWeave, an AI cloud provider that sells GPU compute to AI companies looking to run or train their model. Now, basically, so that's some opener, because he has really gone down hard on companies. So to say this is the worst certainly demands a little bit of attention. And in the piece, he said that CoreWeave may be one of the most financially unstable players in the AI infrastructure space. And despite this 35 billion IPO valuation, he paints a picture of a business that's propped up by very risky financial decisions. It's heavily indebted. It has an over-reliance on a few major customers like Microsoft, for example. So while CoreWeave recently signed a $11.9 or $12 billion deal with OpenAI and has a close partnership with NVIDIA, it gives it early access to GPUs and the most state-of-the-art AI systems. But this guy Zitron Research points out that despite owning over 250,000 NVIDIA chips across loads and loads of data centers, dozens of data centers, it's losing money at a worrying rate. So the top line revenue growth is something of great beauty. It's like one side of a V when you look at its growth trajectory. But the business lost 863 million on that 1.9 billion in revenue that I mentioned in 2024. So it lost, ostensibly 900 million of the 1.9 billion was a loss, and 62% of that revenue, that top line revenue, came from Microsoft. So if you look at Michael Porter's forces on a business, the Porter's, I forget what you call his strategic
Porter's
framework.
5 forces.
Thank you very much. The Porter's 5 forces, like the bargaining power of a buyer is one of those 5 forces. And you can imagine Microsoft's power in negotiation when 62% of your revenue comes from a single customer who, if they flip to someone else, is like a bullet, and it's something that it's a huge risk. And apparently Microsoft has started scaling back its data center commitments with the company. So as much as our 2 IPO candidates here are trying to get out the door at peak good news, you can imagine the importance of getting CoreWeave
2 big
out.
red flags, isn't it?
Oh, big time. I mean, the S1, that paperwork that I mentioned earlier before you IPO, it said that there is not only over dependence on one client, but there's a material weakness in financial controls, says your man Ed Zitron. And he said that AI demand might not be as strong or profitable as many assume. And he draws parallels between CoreWeave and other IPOs that were just absolute you-know-what shows like WeWork. And he's pointed out the company's business model is unsustainable. It's really, really CapEx intensive. It's going to require more capital in the future. And again, he kind of hammers down on the point that debt financing, its reliance on debt financing is absolutely huge. And the company has raised billions through high interest loans secured against depreciating assets. So it goes out, it gets a super high interest loan. It says we have a bunch of, see that shed over there? It's full to the brim of NVIDIA GPUs. And the lender goes, fine, grand, we understand what you've got an asset, but those things are depreciating at 50% a year, probably more. And so its 2 largest loans alone could leave it with 2 billion in annual interest payments, if you can believe that. So when you take all of this into account and the capital intensive nature to just keep building out the most state of the art server farms or data centers or whatever the correct term is, it puts CoreWeave in a more precarious financial position than might meet the eye when you look at the top line revenue growth. And then this is the point where Zitron starts to pull on everything that could be negative. And it's worth mentioning, I think, that he went into a mini rant about, it is, in fairness, formerly a crypto mining firm with no experience in building AI data center infrastructure. But I took that with a pinch of salt because they've done it. It's not like they plan to do it. And I was looking at photographs of the inside of their data centers yesterday. And they're super cool. It's like being inside a spacecraft. All the servers have this nice blue neon light around them. I just think it looked deadly. So I'd sleep in that room.
Be short a company with blue neon lights,
and there you have it, folks. If you want you want to invest in a cool looking server farm, this is the one for you. But Zitron goes on to say that that this IPO is kind of analogous, as I said, to the WeWork one. It's peak AI frenzy, and there's cracks in this generative AI industry itself. And if the so-called backbone of the AI boom can't turn a profit, despite providing critical GPU computing power to major players such as Microsoft, then the underlying demand for generative AI is not what is advertised around the world. So in summary, he Zitron says that CoreWeave is a warning sign for investors ahead of its IPO, and basically it's a house of cards. Now, that is as cynical an article as I think someone will find. But when we go to buy a business, it's very easy to get caught up in, well, I find it easy to get caught in optimism, because optimism always wins at the end of the day. But it's really good to find the most, what's the right word? I don't want to say cynical, but the greatest counter argument to your thinking. And that was the greatest counter argument to the stuff that CoreWeave has put out there. So that kind of paints a non-rosy picture of a business that I believe intuitively most listeners would go, oh yeah, that's going to grow. So we have to balance those two arguments. Of course, it needs a stack of cash. You don't have to, a child would tell you that they're going to have to spend a lot of money to stay relevant. Like, that's the nature of a server farm, whether it's like a CDN, a content distribution network like Akamai back in the 1990s, right through to CoreWeave today, 2025. This is just the way that industry goes.
Yeah, absolutely. But seeing something like that for a stock that you haven't done a huge amount of research on yourself is absolutely, like, that would be enough for me.
Yeah.
Do you know what I mean? Yeah. It's like, okay, I'll sit this one out personally.
100%. I mean, we're going to score each other's out of 10, but let's hold that. But I did buy in to an awful lot of the arguments made by Zitron, because it's kind of, at first you can get excited about that revenue growth. You can get excited about a plug and play provider for AI because everyone is going AI or starting AI. But then you realize does that imply that ultimately it is a commodity, the back end computing power? So we the population, the B2C population, we all use more or less everyone uses Google Drive in some respect. They Google Docs, Google Spreadsheets, Google whatever. We no longer think about the fact that this is all cloud-based office software. It's just the way of the world, and that computing power is held off somewhere else. Well, that transition exists in every business, in every facet of a business, and I think that CoreWeave is doing something very important, very future relevant. I think they'll go on to good things, but are they truly the savior of businesses? I don't think so for a second.
Okay. I'm going to discuss Klarna now in terms of, I suppose, the competitive landscape. We touched on this already. There seems to be a lot of threats here. In terms of direct competitors, I mentioned Affirm would be the biggest one in terms of a pure play, buy now, pay later. PayPal is also there. It's got this pay in 4 offer. There's Afterpay and Sezzle, 2 Australian companies. And then there's Split It, which does things slightly differently, where it does the buy now, pay later service, but it works with customers' existing credit cards. So there are plenty of direct competitors to Klarna. Klarna is the market leader. But if you look beyond, say, those kind of pure play, we'll call them, buy now, pay later, and then see the potential of, say, Shopify as Amazon, which owns the e-commerce checkout that would be predominantly used for buy now, pay later, or MasterCard and Visa, which essentially owns entire payment networks and the entire credit card industry. Or you mentioned Apple Pay or Google Pay, which are slowly encroaching on basically every checkout out there, whether it's in person or online. There are serious threats here from some of the biggest companies in the world. And like, you can make an argument, especially I'd say Amazon and Shopify, maybe it's too far away from their core focus for it to be a real threat. Do they want to get involved in this business? Because they are lending money. Like, that's what it is. I don't think they would want to go set up another entity to essentially lend their customers money. I think that could be a mess. So maybe you rule them out. MasterCard and Visa, they've already dipped their toes with this. They've both released MasterCard and Visa installments. It's just how willing are they to invest and put their thumb on the scales with their existing merchant relationships and everything else. Honestly, I don't know. Would they risk getting on the bad side of regulators again? And alternatively, I thought about this. Is it nearly a good thing for these companies to have some sort of threat to their monopolies? Do you know what I mean? So they can actually point to, oh, well, look, here's a new competitor that we are trailing massively in this buy now, pay later space.
Yeah.
So, that it's almost a good thing that MasterCard and Visa, because have some sort of industry in which they're not leading massively.
Totally.
because
it
because
seems like the unbreakable duopoly between those pair. Yeah, actually, it's a. Can I ask a question, which is slightly less about the competitor? And I hope I don't put you on the spot, because perhaps you haven't used Klarna, but do you interact with it in its own dedicated app? So if I go to buy a Domino's pizza with Klarna, do I do it via Domino's Pizza's app or whatever, or do I do it via the Klarna app?
I have never used it, but I'm pretty sure it works in the same way. Have you? I can't remember what it's called.
Oh, it's probably like Shopify. It's at the basket. You choose Klarna instead of Shopify.
Yeah, and like as in that'll let you sign into Klarna within that environment.
That makes
but
sense.
Do you remember there was a Stripe? It's only a recent thing. There's a Stripe checkout thing. Have you used that yet?
I'm pretty sure I have. Why do you ask? Tell me, what is it? I'd know it if I saw it.
I'm not sure, because it's just reminding me of a similar thing. Or like PayPal, where,
Oh, totally, yeah.
You go from checkout, sign in, and then whatever else. So that's fairly straightforward. But I would argue that aside from its direct competitors, Google Pay and Apple Pay would be kind of the biggest threats. And what they decide to do. And maybe they're in the MasterCard and Visa kind of, maybe it's a good thing we don't monopolize another industry right now in terms of how we look with regulators. But I thought it was really interesting. We were going through competitors and stuff. I just wanted to point out how volatile Affirm has been since its IPO at the start of 2021. So remember, Klarna did the big private raise around the time Affirm went public. So it's been an absolute, I wouldn't even call it a roller coaster, because it's scarier than that. So Affirm went public in January 2021, fell 50% in its first 4 months in the market. It would go on to triple from there in the next 6 months, setting its all-time high at the end of 2021. From there, from November 21 to January 2023, it fell 95%. Which is throughout the course of those rising interest rates and just general sentiment against any growth stocks. In the next 2 years, it would grow ninefold from January 2023 to February 2025. And then in about a month since that, it's fallen about 40%.
Oh, come on. You can't even. I mean, that's a roller coaster extraordinaire.
It was one of the most volatile stocks I've ever seen in the
Wow,
very short
zigzag.
history. So its current valuation is about 15 billion, and it posted revenue of 2.8 billion, which is very similar to Klarna. It is growing revenue faster, 46% year over year, but it is unprofitable. So comparing that to Klarna, it makes the $15 billion target quite reasonable, I would believe. But yeah, I just thought it was hilarious how ridiculous it's been. Imagine holding through all of that.
I'm gonna have to look at that chart, but you did a good job of explaining it there. Right, let me just, I suppose, for the sake of tidiness, describe who CoreWeave's competitors are. I'll do it in 30 seconds, and then we can score each other both of our pitches on a likelihood to grow tenfold at any point in the future. So AWS. Like AWS already offers GPU through this AI GPUs through its EC2 platform. Microsoft have their Azure platform, Google Cloud platform, even their specialist AI companies like Lambda Labs, who I presume most people have heard of, and they're a specialized provider of AI processing chips and on demand. And even NVIDIA themselves have GPU as a service directly. So it's going straight to the source. There are competitors everywhere. I know, obviously, they're not doing things in the way that CoreWeave is doing it, or else they would not have seen a 120, 130-fold growth in revenue, but they're there. And if AWS...
in fairness to those companies, though, they haven't started a $50 million
correct.
base. Do you know what I mean?
That's right. That's so true. So you're right. But the point is there enough market to go around, and is there enough market for them to I suppose maintain growth? I was going to say that growth trajectory, but growth is a point to be considered. But there's competitors and waiting everywhere. So
it's funny, we talked about both competitive landscapes, and we just basically mentioned the largest companies on the stock market on either side.
It's inescapable. One of the things I try and consider when I'm buying a stock is, can the Magnificent Seven ruin this business overnight if they choose to do so? So when you look at Sherwin-Williams, the answer is no. Or at least
this is a very apt conversation for right now, I think, for both of these companies.
Yeah, entirely. Right. Okay, look, this podcast has kind of drifted. So let's just talk about Klarna. And the question we're both answering is, on a scale of 1 to 10, 10 being the most positive, 1 being the most negative, what do you believe the chances are that Klarna can grow 10x in value from its IPO price and IPO valuation at any time in the future?
Yeah, so I gave this a 3. I'm not bullish. I'm not bullish on the industry as a whole. We talked about the threats and the power Apple Pay and Google Pay could have, even Microsoft and MasterCard and Visa, if they really wanted to get involved. Apart from, the existing kind of competitors there as well. So a real overarching threat of big businesses coming in and eating Klarna's lunch. Aside from that, I think the buy now, pay later industry as a whole paves over a lot of cracks in terms of subprime lending, giving people an easy way to get into debt, and just the overall lack of oversight when it comes to credit worthiness of its end users. So yeah, and then if this stock was to 10x, it would become a $150 billion company on its $15 billion target. That would make it one of the largest consumer finance companies on the market, just behind American Express. I am not confident on that prospect at all. So look, I know it's playing a different ball game, and we talked about blue ocean strategies. Klarna is certainly doing that with consumer lending, because that's essentially what it is. It's a lender of sorts. But I don't love buy now, pay later as a concept. I think it's a way too frivolous way of getting people who maybe don't even understand kind of consumer debt into consumer debt. There are doing interesting things. I think the AI aspect of it is interesting. I think I suppose blue ocean approach to lending as a whole is interesting, but for me, I'm not very confident on the business or the industry. And we could talk about, like, a similar way to CoreWeave. there could be a commoditization of buy now, pay later as a whole. I'm not sure how much of a moat it has either. Do you know what I mean? Bar just the scale it's already established.
Totally.
Especially when you consider the reach some of its potential competitors have in terms of MasterCard, Visa, Google, Amazon, or Google and Apple, or Amazon and Shopify too, in terms of they're already there at the checkout in some way, shape, or form. So yeah, I am not very confident in Klarna. I will not be buying the IPO. I could be wrong. I'm happy to be wrong on this one. I'm going to sit it out.
Yeah. I'm in the same boat. I would score 3 as well. And when you look at what it takes for a business to 10x in value, it takes a lot of time. It takes a specific, it takes barriers of entries that can be upheld for a long period. If you take Coca-Cola, a universal B2C brand, the last time you could buy it at 10% of today's price, in other words, it's up 10x, is 1991. It's taken Coca-Cola 34 years to 10x, right? Now, Coca-Cola has, well, let's not even talk about it. But the point I'm trying to make is the amount of uniqueness and skill you need to grow 10x post IPO is pretty rare. So I just don't see Klarna becoming a $150 billion business in the next 30 years. If their business model is that enviable and is that profitable, the other giants will switch on that functionality overnight. Overnight. I mean, I wouldn't be surprised if I walked down to my local lunch place and went to pay with Apple Pay and I saw on the screen, do you want to phase this over 3 months or whatever the options are? It's that easy for the consumer to be won over. Because
and not only that, but like something like Apple Pay or Google Pay would have way more information about you too. They could actually do buy now, pay later in a more responsible way.
Yeah, entirely.
Yeah.
I do want to save this for payday, or whatever. But I agree.
Yeah.
Right, I'll give it 3, and I think 3 is generous. Okay, talking about
I think I was about to say,
yeah, we've just talked ourselves down to a 2. I'd even go so far as to say, it's not high. I mean, I never like predicting negative outcomes because it's not good for the soul, but it's possible. But I wouldn't be surprised if Klarna was, I don't want to say wiped out overnight, but when you think about the power of those giants, when eventually the world has bought in on scale at scale of what Klarna does, the giants, the Visas, the MasterCards, the Apples and Googles, and whoever else will go, right, you can do that here. Simple as that.
But it depends though. Like, as in right now, Klarna's revenue is a rounding error for those companies. So
yeah, true. And then that also begs the opportunity size question.
Yeah. Okay.
All right.
So
but neither of us are too excited, and we're not sticking it on I want to buy this stock watch list. CoreWeave, is it going to be $350 billion business, 10x from its IPO, alleged IPO valuation, making it one of the biggest companies in the world? No, I don't see that happening. Again, when something is outsourced to a point, it is commoditized. If a business decides GPU computing is non-core, it is therefore there's an available list of suppliers that is analogous to a commodity, and I don't see CoreWeave 10xing from here. So I'm going to put a big fat 2 out of 10 on it. What about you?
I find it hard to disagree with anything you said. The only thing I would be interested in is just watching how it manages to continue growing, because you can't replace that kind of explosive growth. And so what it grew 9-fold, we'll say, from 2023 to 2024. Now it's at nearly 2 billion. What's it going to do from 2024 to 2025 or 2025 to 2026?
Yeah.
Because, and there's so many detractions. I'm not saying your man Citron was wrong in anything he said, but if that company still manages to deliver triple-digit growth for the next 2 years or 3 years, can't be ignored. So I don't know. I'm not bullish on it at all, but if the demand stays as it is, which there's question marks over it, and like we're talking about Microsoft as over half of that demand, and so there's huge risk factors there. Yeah, maybe I'm talking myself out of it now. The more I talk, I wouldn't. I'd give it more than Klarna, if that makes sense. But neither.
It does make sense, and I think your argument is solid there. That I mean, if they've just landed circa $2 billion in revenue last year, if that grows to $5 billion, the capital requirements argument will diminish quite a lot. They'll get the funding and they'll get it paid back because the money is firing in the door so fast. So yeah, okay, right. Well, what score? Go on, hit me with a number.
It's still only a 4. No, 4 seems even high. 3.5.
3.5. Oh, we're going to decimals. We should next time do percentages. That gives us a full array from 1 to 100. Yeah. Okay, so there you have it, folks. You've just listened to a 1-hour conversation about 2 stocks neither of us plan to buy.
But it is. It's always good to talk about IPOs as they come out because they're going to dominate headlines, especially these 2 businesses.
So, it's fascinating. I'm glad the IPO market has at least got a little bit of blood flowing into it, because we were in a kind of a vacuous space for ages. It was, if it wasn't a SPAC, it wasn't happening, and that was a very weird synthetic kind of world to be living in our industry. And we should do this again, because I think in a few more weeks, when we get 2 more interesting IPOs, we should throw them on the table and kick them around.
Yeah, well, if these two tank, I don't know if there'll be many queuing up after them.
That is true. They set the scene, and they're the 2 big names that are ready to rock and roll.
Yeah. Okay. That was really good, Emmet. We'll try to do something similar when we get the next opportunity to. But yeah, thank you for joining me, and thank you everyone for listening in. We're going to talk to you next week.